Your market news now. Asian stock markets struggled to make headway after weak U.S. consumer data rather stoked recession worries and nudged investors towards safe assets such as bonds, while Japan's yen rose as markets doubted the Bank of Japan's policy commitments. U.S. retail sales fell by the most in a year in December, putting consumer spending and the overall economy on a weaker growth path heading into 2023. Meanwhile, minutes from last month's European Central Bank meeting are due later. Locally, JSE-listed retailer Woolworths expects its headline earnings per share for the first half of 2023 to increase by between 70 and 80% as higher festive spending in South Africa and increased footfall in Australian stores boosted performance. To join us, to talk to us a little bit more about the market dynamics, we are joined by Sean Dendere, who's a senior sales trader at Trive. Sean, thank you so much for your time. I mean, let's talk about the overall market sentiment right now. How are you assessing it?
All right. Firstly, thank you for having me, and good afternoon, and to all your listeners as well. So overall market sentiment, I think it's a bit of a mixed bag. If we're looking, I'll start off in the US. If you're looking at the US, we have the Fed that side that is obviously seemingly trying to taper down the interest rate hikes. However, what is happening in that economy is that the market and the Fed are fundamentally not agreeing with what the Fed is doing and how the market is reacting. We can see that, okay, cool, the inflation increase, the interest rate increases last year have been priced into the market. You can see inflation going down. But if you look at other factors such as food inflation and fuel inflation, they are currently sitting at extremely high, high percentages.
On that note, then, when you look at, the bond market performance, what signals and cues are you taking from that?
All right, so with the bond market, we are seeing that there may be a rally in the bond markets, just purely because how interest rates and bonds have that inverse relationship. So with the softening of interest rate hikes across the board, or potential softening, we are seeing people, entering the bond market again with the view that in the long term, there might be a turnaround once everything stabilizes to decrease interest rates in the economy.
Locally, we had two announcements on Sense, but the one that I suppose is probably quite serious is the Sense announcement out of SPAR conceding that, two loans that appear, rather three in this particular case, totaling 11 million rand, should never have happened. What do you make of that story coming out of the retailer SPAR?
All right, quite an interesting one, and I think it's a bit of a sensitive subject based on the allegations that they had last year. But my view is that I think from a SPAR perspective, they have made the right decision by, adjusting their board and their directors, and we can see that in the market is reacting positively to that, they have accepted, for the lack of a better term, guilt, and they are now implementing measures to ensure that that doesn't happen in the future.
So let's stay with the retailers. I mean, your view of retailers in this environment where interest rates are rising and we are also getting word that consumers are feeling the pinch. What's your assessment of the retailers? Okay,
so from the start of the year, right, if we're looking at your Woolworths, ShopRite, Pick n Pay and the like, the big retailers, they have fundamentally been in the green from a trading perspective. That is just due to, the Reserve Bank and the like increasing interest rates. You can see that there is a slowdown in inflation, meaning that, from a CPI perspective, consumers have more disposable income in the short term. However, just due to the nature of the country right now experiencing load shedding here and there, well, not really here and there, all the time, it is going to put a lot of pressure on the retail food retailers, purely because there's going to be a lot of food wastage. There's going to be increased costs with regards to fueling generators and the like. So on the basis of Eskom, it seems like it's a dim view going forward, but as it stands, it is currently positive.
And then we also had a trading update coming out of Woolworths saying here that the return of customers to physical stores, particularly in Australia, led to a substantial increase in their brick and mortar sales. What is your key takeaway, I suppose, from that trading update, and how did the share price react?
All right, so if we're looking at Woolworths Holdings at large, this morning at open, I think Woolworths is trading around 6%. That is off the back of the news. I think you mentioned earlier in your segment that, they are expecting an increase of between 70 to 80% in the earnings per share, which is really great for Woolworths. And then I think also the market is reacting quite well to Woolworths in that, well, their earnings results or the expectations. Then if you look at Woolworths, you mentioned that, in Australia, there has been massive more footfall, let's call it that, just due to people going into the stores, buying more stuff, which is boding well for the company. What I find interesting though is the sale of David Jones. So the sale of David Jones may look like a negative, but in my opinion, it will help Woolworths really focus on the retail food market.
On that note, then, speaking of expectations, let's take things stateside. Your expectations for this earnings season?
All right, earnings season, I think it's very interesting. I think if you're looking at the S&P 500, it has been generally down, and post-COVID, different markets opening and the like, the earnings that are coming out of there we have a view that it's going to be positive, mainly on, your sectors in energy, materials and industrials. However, the S&P is expected to still be down in the quarter by 2.4%.
Sean, let's leave it there. Thank you so much for your time. That is Sean Dendere, who is a senior sales trader at Tribe South Africa. We're going to take a quick break. When we come back, we'll have more economics news for you.